All right, 3 months after the auto tariffs kicked in, transaction prices are edging higher, with a couple of trends dictating which brands are charging more. LeBeau joins us right now. He's got to look at where prices are headed and which companies are upcharging. Phil, good morning. What's the answer?
Well, it's not that they're upcharging, Becky. It's that because of a variety of factors, they are asking the customer to pay more. And the customer is paying more, though sales are slowing down. Let me give you an example here. Sales slowing down for those particular brands. Let me give you an example where the transaction prices have gone up. Now, this is year over year. Land Rover is a perfect example where the tariffs had a huge impact, and as a result, Land Rover has essentially had to pass a lot of that on to their customers. Cadillac has been rolling out some new EVs at a higher price point. There's an explanation for each specific brand, but when you look at the overall transaction prices for the industry, comes in right now at $48,841. That is just a smidge under the all-time high, but auto prices in July compared to July of last year up 1.5%. And the expectation in the industry is that it will continue edging up in the months to come. Though some brands, Jeep, Tesla, Acura, Chrysler, they've seen their transaction prices drop. Jeep and Chrysler, we know the issues that are happening at Stellantis. They're trying to correct those right now. Tesla, we've talked about the issue with it being brutally competitive for them right now, and as a result, they are trying to do whatever they can to increase sales. So as you take a look at GM, Ford, and Toyota, the reason that we're showing you these is that these are the mass market brands. Keep in mind that they don't raise prices across the board. It depends on the model and the competition for that model. Let me give you an example. The Toyota RAV4. You might sit there and say, well, are they raising the prices there? Not necessarily, because they might be looking across the street at a comparable model from Honda, and the prices have not gone up, and the dealers have to adjust to the competition. Bottom line is this. There is still healthy demand in the market, as you see with the July auto sales rate of 16.87 million. And we're well above 16 million right now for the year, which many people did not expect after the tariffs went into effect. But we are seeing a gradual increase in transaction prices.
Hey, Phil, you said we are just a smidge away from the all-time high. I guess maybe the newsworthy part is we're not even at an all-time high with these new tariffs that have come in. When was the all-time high, and why was it higher then than now?
It was only a couple of $100 higher, and it was a year or two ago. I mean, it's been hovering in that $48,000, $49,000 range, Becky. So it's not off by much. And when I say we're only a couple $100 away from an all-time high, there are factors, seasonality within the auto industry that impact that. I would generally say we are there. We are really, really close to an all-time high. But it hasn't surged. I mean, a lot of people thought once the tariffs go into effect, many people were predicting transaction prices on average will go well over $55,000. That has not happened.
Okay, because that's kind of what I thought, too. The idea that you're not at an all-time high and you're not surging to these new levels, does that come down the road?
And you know why, Becky?
Why?
You know why? Because the automakers are generally eating the tariffs. Generally speaking, they are eating the tariffs. Not all of them. Yeah, the margins are taking the hit. That's where you're noticing the impact. Let me look at the Q2 results. We saw it, GM, Ford, Stellantis. I mean, they're all taking a hit because they can't afford to say, I'm going to raise the price $7,000 when the guy across the street is still keeping it at the existing price. You have to do what the market is dictating.
You're only as smart as your dumbest competitor, too.